Tonight, a seismic move. Apple just announced an additional $100 billion investment in U.S. manufacturing, bringing their four-year total to $600 billion. A splashy Oval Office moment with President Trump. But what lies beneath the glittering surface? As a financial analyst, we're diving in. On August 6, 2025, President Trump and Tim Cook revealed that Apple will pour another $100 billion into U.S. manufacturing and tech training, building on a previous $500 billion pledge from February. That brings the total to $600 billion in domestic investments over 4 years. Time The Guardian, Financial Times Business Insider. Apple cited expansion of component production, like glass from Corning's Kentucky plant, and partnerships with companies such as Samsung, Applied Materials, Texas Instruments, and Broadcom. Globally, markets rallied on Apple's stock lift, European and Asian indices, including DAX, CAC 40, Nikkei, Hang Seng, Kospi, all climbed that day, AP News. TSMC and other chip makers with U.S. exposure also gained as Trump exempted those investing domestically from his 100% chip tariffs. Macroeconomically, tariffs on India, the EU, and other nations risk inflating consumer prices and destabilizing trade flows. Apple's pledge helps buffer some pressure, but broader tensions remain. Economists warn of uneven global growth and possible legal challenges to Trump's tariffs. So what does this mean for shareholders? Let's talk market reaction and risk. Apple's stock jumped about 5% after the announcement. Investors clearly cheered the move. It's seen as smart diplomacy. Apple's offering an olive branch to escape costly tariffs, and it appears to be working. Still, this isn't a U.S. iPhone assembly revolution. Final assembly remains overseas. Making in the U.S. would raise costs dramatically and take years to scale. Analysts caution the $100 billion largely repackages pre-existing investment plans. It's more strategic optics than a drastic production shift. Shareholders get short-term relief in optics, but less clarity on long-term cost structure. For domestic suppliers and policymakers, this is a win. U.S. companies like Corning and Samsung's Texas chip operations get a boost, and states like Kentucky gain manufacturing jobs and economic activity. For workers and training programs, Apple's expanding its Advanced Manufacturing Fund, doubling it to $10 billion, and launching its Manufacturing Academy in Detroit. Tens of thousands of U.S. jobs for R&D, AI, and manufacturing tech are on the table. Yet global assembly hubs in India, Vietnam, and China remain crucial. Apple isn't abandoning those networks. Instead, it's hedging tariff risk without disrupting supply chain fragility. And there it is. Apple's $100 billion pledge is a masterclass in strategic optics, quietly repositioning itself amidst tariff threats without disrupting the complex web of global production. Shareholders get a pop, domestic suppliers gain muscle, and global markets breathe a brief sigh of relief. But the bigger question remains, can Apple really ever bring iPhone manufacturing home? Or is this just chapter 1 in a longer, costlier tale? Only time and tariffs will tell. So what have we learned? Apple's $100 billion Made in America moment is more than just good PR. It's a calculated geopolitical chess move. Shareholders get reassurance, U.S. suppliers get opportunity, and global competitors get a warning shot. But underneath it all, it's a hedge, a way to stay in Washington's good books while keeping China, Vietnam, and India in the assembly loop. This is not just about iPhones or factories. It's about the future of globalization. It's about what companies must now do to survive a world where politics and business are tangled tighter than ever. Apple is making a bet on America, but also on optics, timing, and strategy, and the rest of the world is watching. Now we want to hear from you. Do you think Apple's $100 billion investment is a genuine commitment, or just a smart PR move to dodge tariffs? Drop your take in the comments. And if you're into business, finance, and real stories behind the headlines, hit that like button, subscribe, and turn on notifications. We break down the news the way Wall Street watches it, and the way Main Street needs to hear it. Until next time, stay smart, stay curious, and keep your eyes on the money.